some of its wealth. For more on Venezuela's vast oil reserves, I'm joined now by energy expert Cornelia Meyer, the CEO of Meyer Resources. She's also chairman and chief economist at LBV Asset Management. It's good to see you.
Good morning, Paulo.
Yeah, good morning to you in Switzerland. So the reserves are vast in Venezuela, but just how much of global oil production is Venezuela responsible for?
Well, at this point, very little. It is about 934,000 barrels a day, which is less than 1% of global production. Venezuela used to produce in the heyday more than 3 million barrels a day, so that production came off due to mismanagement under Chavez and Maduro by about 70%. So very little. So whatever happens, it will not immediately have a big impact on oil prices. You saw they were actually falling. And mind you, it's great if U.S. companies are going in, but this is not a light switch. Reigniting the upstream production does take time. Few 100,000 barrels maybe over the first 6 months or so. So it's not as easy as it looks. One more thing, Chevron is operating currently in Venezuela, is exempt from sanctions because under a production sharing agreement, they're not paying the regime dollars, they're paying them in barrels.
So you mentioned the complicated nature that is more than just a flip of a switch. But what about companies like Chevron? I mean, would they go in if there are no guarantees for their assets, security guarantees for their assets? I mean, would they go in a volatile area?
Well, Chevron is in. So for Chevron, they know how to handle it. But it's a very good question because what you see with U.S. companies, they tend to be a little bit more jittery in going in U.S. and European companies when there is too much political instability, too much volatility. We saw that, for instance, in Iraq. It was Chinese companies, Russian companies that initially went in. It was not U.S. companies and Western companies. They then followed as the situation got better. And that brings me to the next point. This is not just about oil. It's also about rare earths and Chinese control of mining operations in Venezuela, which then makes what happened compatible with the new U.S. security strategy.
Cornelia, there are drivers in the U.S. and around the world that are watching. I'll ask a question that's probably heavy on their minds. How could this jolt to Venezuela's government impact oil markets and specifically gas prices?
Well, I think it is at this point, as I said, not impacting oil markets because it's localized. It's less than 1% of global production, so it doesn't really in an oil market that is sort of oversupplied. By some people, OPEC says just well supplied. Other people, like the IEA, say oversupplied to the tune of 2 million barrels a day. It doesn't really make that much of a difference. But what we have to look at is again the stability, because this is Latin America has actually become very important for incremental new oil production. When we look at the new oil production, non-OPEC oil production coming on stream comes from the US, it comes from Brazil, it comes from Guyana, and it comes from Argentina.
Okay, finally, Cornelia, can you help me fact check President Trump's claim that, and you may have just heard it right now, that the U.S. is owed some of Venezuelans' oil wealth? I mean, what is true about that?
Well, there was a nationalization spree in the 1970s, and then again when Hugo Chavez came in, he sort of nationalized some more. So if you look at that as appropriating what was owned by the U.S., you can go there, but then you can also say, what were the precise ownership agreements? Were they production sharing agreements? Were they concessions? What was it? But certainly there has been nationalization twice in Venezuela.
Really now, in terms of what you'll be watching closely, especially as we wait to see what the next chapter for Venezuela will be, I mean, what do you think may be an outcome, particularly for the people of Venezuela? I mean, there was one Venezuelan migrant who fled that country and said that their oil was, in her words, it was stolen 25 years ago. So what do you think may be the best outcome for the people who stayed behind?
Well, the best outcome, the most important outcome is stability. You know, we've seen in other places when foreign countries sort of go and take over that chaos and instability ensued, and that's not good. So stability and security for the population is the most important thing. Secondly, you know, if they're no longer under sanctions, that, you know, economic activity can resume because, you know, Venezuelans were suffering. The 30 million that stayed, 8 million left. The 30 million that stayed, you know, they had hyperinflation. There's so many people sunk below the poverty line. It was really quite difficult. So the best thing for the people of Venezuela would be economic and political stability.
If Trump's tariffs from last year have taught us anything, is that economic stability, the stability in the markets, that translates to stability for the population and consumers. Cornelia Meyer, as always, thank you so much for letting us tap into your expertise this morning.
Thank you very much for having me.